But let's talk about Marico. That's the only stock in the FMCG pack which is holding flattish, mildly in the green if you must. And that's because the company reported earnings last Friday, which was largely in line with street expectations. But importantly, they're looking at commodity cycle deflation as against all the other companies which are looking at commodity inflation. Saugata Gupta, the MD and CEO of Marico, now joins us. Thank you, Saugata, for joining in. And let's take that point forward itself. Marico is among the few companies where gross margin is witnessing an expansion sequentially versus a contraction. What's the trend looking like going ahead?
So if you look at the composition of our input cost, a significant part is copra. And yes, copra is on a deflationary phase. And you must realize that we had a significant inflation in both copra and other vegetable oils during last year. Obviously, the part which is going to be still inflationary is crude, which is not showing any signs of coming down. But overall, obviously, if you have seen this trend from quarter 3 over quarter 2 and quarter 4 over quarter 3, there will be sequential gross margin improvement. And as we step into next year, I think there will be obviously improvement in EBITDA margins.
Okay, all right. So what does that improvement on the EBITDA front look like?
So I think, see, if you look at our long term, this one is 19% plus. And it's certainly, as I said, in Q1, where both the gross margins going back into normalization and EBITDA margin, that process will happen. At the same time, as I said, that we have a significant innovation agenda, especially in foods and digital. And as you see from last quarter, we have started increasing our A&P spends, and we will go through that. But I believe that by quarter 1, which is next year, you will have a gross margin normalization happening, and also EBITDA margin inching up towards our normalized medium-term levels.
All right, 19 to 20% is your normalized medium-term level. I guess there would be some price cuts as well that would come by. But importantly, is rural demand still slow? How about the outlook on urban sales as well? What's demand looking like right now?
So I think if the way to look at it if you look at the rural growth, I think the slowdown is also a little bit optical, because if you look at on a run rate sequential basis, the rural markets is, I think the concern is less. I think a part of this was, of course, as I said, is a high base. In fact, as you know, for example, we are lapping an overall volume growth base in Q3 and Q4 of around 15 and 25% respectively. I think one of the contributors to a little slightly softening of the demand could be high food inflation. And I believe that that will slowly, slow down, because as you know that if there is high food inflation, there is some titration that happens in the overall FMCG market, and also a little bit of downgradation. Also, I think if the input cost increases and you take disproportionate price increases beyond the point absolute pricing, that also leads to a kind of a propensity to downgrade. And that's the reason, while we had significant input cost increases last year, we hadn't passed it on to the consumer. So, but having said that, if I look at the other matrices, which is the direct benefit transfer, the MSP, the monsoon has been good, the crop looks good, I believe that this is a transient phase, and it will start, the demand situation will start improving over the next couple of quarters.
Okay. All right. Mr. Gupta, any more details with regards to the food segment? Has that seen any pressure simply because of the normalization of immunity products as the impact of the latest COVID-19 wave subsides?
So if you look at it, I think food has been a broad-based growth. I think whether it's been oats, masala oats, which continues to increase market share and penetration, and it has also performed well, whether it's in home, out of home. I think the penetration increase and market share increase has been substantial. As far as the other food is concerned, I think honey is the immunity part of it, but you have soya nuggets doing well. We have just launched noodles. And let me tell you, I think we are planning to at least enter into 1 or 2 more categories in the next, either in quarter 4 or quarter 1 next year. So our food journey, if we look at our food ambition, I think we are in striking distance of our 500 crore ambition this year. And then we have a target of aspiration of hitting 850 to 1,000 crore by FY24, which means you have to grow at anything between 25 to 30%. And given our plans and given our innovation plans, I think we are very much there. I think two things we have got right and one thing you have to get right. I think today we have a far more solid capability as far as a innovation pipeline, executing it in food. We are still on a journey to get our food GTM, specialized food GTM right. And the second thing I think we have to, I think we have to be, our resilience as far as NPD is concerned has significantly increased. So it's not that everything will succeed first time, but we will keep on trying and we will get everything right. And that's the same thing. If you look at Chyawanprash, I think we started off, I think we learned some of our, there were quick learnings. We have come back well, and I think it's now going satisfactorily. So I believe that we are pretty confident about foods, that food will become one of the significant drivers, our long-term diversification and transformation journey. And that 850 to 1,000 crore aspiration and FY24 is very much within reach.
Right, we take that point. 850 to 1,000 crores is what you're looking at by FY25. Saugata, I remember a couple of years ago when we were talking about the long-term strategy for Marico, and you at that time had said that food is an important part for you. And that time it was absolutely insignificant in your overall scheme of things. But importantly, now as we go from here, by FY25, what's your target as far as the addressable market is concerned? You've moved from a lower TAM to a higher TAM. What does revenue composition and margin expansion look like going ahead by FY25?
I think rather than giving, let me just give you some inputs. I think as far as we are concerned, a 13 to 15% revenue CAGR is something which we are targeting. That will have obviously a volume growth component. That will also have a mix or a inflation component. Having said that, the other interesting part is that we now have a very, very robust international business, which is on a virtuous cycle of growth. We have done a very good diversification journey in Bangladesh. We have already, expanded the total addressable market by entering into categories like baby, colors, shampoo. Similarly, we are now started expanding and replicating that successful Bangladesh model into Vietnam and Middle East and North Africa. So I would say that far more diversified portfolio. And within India, I think if you look at the current new products, which is, or the new portfolio, if I call it, which is non-core, which is, male grooming, skincare and foods that constitute, they're still in single digits in terms of contribution. I believe they will be in the mid-teens to high teens by FY25.
Okay, all right, Mr. Gupta, we're going to leave it on that note. Thanks very much for joining in and speaking with us. Well, like Mangalab said, this is one spot of green in what is a very, very red market at this point in time. Marico up around 0.5%, and they do expect margin improvement and gross margin improvement to continue for the company. Food also will be a significant driver. Take a short break. We'll